The last time Americans felt this pessimistic about the economy, interest rates were above 15%. And we are not anywhere close to that today. Welcome back to RealPage Economy Express. The University of Michigan and the Conference Board both picked it up over the past 2 weeks. People are pulling back from big purchases and shifting to what economists are calling cheap thrills. Restaurants, streaming, pet care, and this morning, the University of Michigan's preliminary May reading dropped again, signaling the pessimism is not letting up. The Iran conflict is doing most of the psychological damage, pulling gasoline prices higher and rattling consumer confidence in the process. The broader economy, though, is actually holding better than the mood suggests. First quarter GDP bounced back solidly from a very weak fourth quarter, driven by a rebound in government spending, strong AI-related investment, and decent consumer activity. The number missed forecasts slightly, but the direction was clearly better. The problem is that inflation tagged along for the ride. The Fed's preferred metric, PCE, is running well above target, and that keeps any conversation about rate cuts firmly on the shelf for now. The labor market is telling a similar story, still standing, and this morning's job report backed that up. April added 115,000 jobs, nearly double what forecasters expected. Healthcare led the way again, followed by transportation and retail. Federal government headcount, kept shrinking. The unemployment rate held steady. Wages are still growing, but not fast enough to outrun what people are paying at the pump and the grocery store. The housing is where the data gets somewhat interesting. Builders surprised everyone with a surge in housing starts in March, hitting the highest pace since late 2024. New home sales jumped as well, and they beat expectations. However, builders are slashing prices to move inventory, and the median new home price just hit its lowest level since 2021. Builders are essentially paying buyers to show up, and for now, well, it's working. Meanwhile, the Case-Shiller Index showed that existing home values are losing ground in real terms for the 9th straight month, with more than half of major markets now posting year-over-year price decline. And mortgage applications pulled back as the 30-year rate climbed back towards 6.5%, cooling some of the spring momentum that had been building. That is the week in a nutshell. The fundamentals are not falling apart, but between inflation, shaky confidence, and energy prices that refuse to cooperate, it is hard to feel good about it. Thanks for watching RealPage Economy Express.